U.S. stocks plunged on Wednesday, with all three major indexes posting their biggest daily decline in months after the Federal Reserve cut interest rates but signaled a slower pace of rate cuts to come. The Dow dropped more than 2.5%, suffering its 10th straight session of declines, one shy of its longest-ever losing streak. The S&P 500 plummeted nearly 3%, and the Nasdaq nosedived more than 3.5%. The Fed cut rates by a quarter percentage point, which the market had all but priced in. But the central bank disappointed investors by signaling it may cut rates just twice in 2025, given the solid labor market and the recent stall in lowering inflation. Michael Landsberg, chief investment officer at Landsberg Bennett Private Wealth Management, thinks even that's too much and that the Fed shouldn't cut rates at all in 2025.
I'm at zero for next year. I don't necessarily think they're going to do that. I think inflation is going to continue to go up. I don't think it's going to go up to 9% or anything, but it's going in the opposite direction of what the Fed wants it to do. And I think that's an environment where you're not going to cut into that.
Despite Wednesday's sell-off, the Dow is up more than 12% on the year, while the S&P has rallied about 23% and the Nasdaq has shot up more than 29%. Shares of cryptocurrency-related companies were some of the hardest hit on Wednesday after Fed Chair Jerome Powell threw cold water on President-elect Donald Trump's potential plan of creating a national Bitcoin reserve. In his Wednesday press conference, Powell said the central bank is not allowed to own Bitcoin and is not seeking a law change in order to do so. Shares of Bitcoin proxy MicroStrategy tumbled 9.5%, while Bitcoin miners Mara Holdings and Riot Platforms plunged more than 12% and 14%, respectively. Small-cap stocks, seen as benefiting from a lower-rate environment, also fell after the Fed's outlook, with the small-cap Russell 2000 index shedding 4.4%, its biggest drop since June of 2022.